and welcome to our news video. Subscribe to our channel and share your comments so that you don't miss any important news. The Cryptocurrency News End channel does not recommend any offers to buy, sell, invest, etc. in the cryptocurrency market in any way, and any losses and other consequences are your responsibility. Our channel only follows the news of the cryptocurrency market and does not provide you with any advice on making transactions. Please enter into transactions in the market with your own analysis. Michael Saylor is buying Bitcoin again? Is a massive BTC rally on the horizon? Bybit faces crisis. CEO claims full recovery after devastating $1.4 billion Lazarus hack. Montana lawmakers reject Bitcoin reserve bill, a major setback for crypto adoption. Hong Kong investment firm's Bitcoin gambit. Is a market shock incoming? Bitcoin struggle below $100,000 sparks fears while ETH, BNB, XMAR, and TO gain momentum. Michael Saylor's Bitcoin buying spree resumes. Is a massive BTC surge incoming? Institutional frenzy as strategy moves to expand its Bitcoin holdings. The crypto world is on high alert as Michael Saylor, co-founder and executive chairman of Strategy, formerly MicroStrategy, drops another major hint about an imminent Bitcoin, BTC, acquisition. Following a brief pause in its aggressive buying strategy, the company appears poised to resume accumulating massive amounts of BTC. Could this be the catalyst for another explosive Bitcoin rally? Strategy's Bitcoin stockpile nears 500,000 BTC. Strategy, known for its unwavering Bitcoin investment strategy, recently made waves by completing its latest BTC purchase on February 10th. The company acquired an additional 7,633 BTC, worth over $742 million at the time, pushing its total holdings to a staggering 478,740 BTC. At current market prices, Strategy's Bitcoin holdings are valued at over $46 billion, reflecting an astonishing 47.7% profit margin, according to Saylor tracker data. This relentless acquisition strategy solidifies Strategy's dominance as the largest corporate holder of Bitcoin, far surpassing any other publicly traded company. Saylor's strategic plan: more leverage, more Bitcoin. Michael Saylor has made no secret of his bullish stance on Bitcoin. In Q1 2025, he revealed the company's plan to ramp up its use of intelligent leverage, a move aimed at financing even more Bitcoin purchases. The goal? To maximize shareholder value while strengthening Strategy's position as the leading corporate Bitcoin accumulator. The latest development comes after the company's rebranding to Strategy from MicroStrategy, a move designed to reflect its deepening focus on Bitcoin as its primary treasury asset. This strategic pivot has only fueled more speculation about the company's next major BTC move. Institutional giants and U.S. states bet big on Strategy. Despite skepticism from some analysts about the sustainability of Strategy's aggressive Bitcoin acquisition plan, major institutional investors continue to double down on the company. On February 6th, a filing with the U.S. Securities and Exchange Commission (SEC) revealed that BlackRock, the world's largest asset manager with over $11.6 trillion in assets under management, had increased its stake in Strategy to 5%. But it's not just private institutions that are showing confidence in Strategy's Bitcoin-centric approach. A shocking revelation indicates that 12 U.S. states currently hold Strategy stock in their pension funds or treasury reserves. The states include California, State Teachers Retirement Fund and Public Employees Retirement System; Texas, Florida, Illinois, Arizona, Colorado, Louisiana, Maryland, North Carolina, New Jersey, Utah, Wisconsin. Among them, California leads the pack, with its state teachers' retirement fund holding nearly $83 million in strategy stock, followed closely by the California Public Employees Retirement System with $76.7 million. With so many states indirectly exposing themselves to Bitcoin through strategy stock, the implications of a BTC price surge or a potential collapse are massive. Could this institutional backing signal the next phase of widespread Bitcoin adoption? $2 billion convertible note sale, the next big Bitcoin buy? Further fanning the flames of speculation, Strategy announced on February 20th that it had priced a massive $2 billion convertible note offering, its latest move to secure additional capital for Bitcoin acquisitions. Given the company's historical pattern, this could translate into another multi-billion-dollar BTC purchase, potentially sending Bitcoin prices skyrocketing. But the question remains, can Strategy sustain this aggressive accumulation strategy? And what happens if Bitcoin's price takes a sudden downturn? With institutional investors backing Strategy and the company's relentless push to expand its Bitcoin holdings, is this the beginning of a new BTC bull run, or the setup for an unprecedented financial shakeup? Is Strategy's relentless Bitcoin buying spree setting the stage for a historic BTC rally or a market implosion? Bybit faces crisis. CEO claims full recovery after devastating $1.4 billion Lazarus hack. Bybit CEO Ben Zhou has announced that the cryptocurrency exchange has completely replaced the staggering $1.4 billion in stolen Ether following one of the largest hacks in crypto history. The attack, attributed to North Korean-backed hacker group Lazarus, sent shockwaves through the industry, sparking panic among traders and investors. In a February 24th post on X, formerly Twitter, Zhou assured users that Bybit's reserves are back to a 1-to-1 ratio, and a new proof of reserve report would be published soon to verify the claim. The report, utilizing a Merkle tree structure, is intended to restore investor confidence after massive withdrawals rocked the platform. Massive Ethereum acquisition to plug the security breach. Blockchain analytics firm Chain estimated that Bybit had accumulated approximately 446,870 Ether, valued at $1.23 billion, through various means, including loans, whale deposits, and direct purchases. This sum accounts for nearly 88% of the stolen assets, raising questions about the remaining missing funds. Chain's analysis traced the transactions to a wallet address associated with Bybit 0x2E45 1B77, which acquired 157,660 ETH worth $437.8 million through over-the-counter (OTC) deals with prominent crypto investment firms such as Galaxy Digital, FalconX, and Wintermute. Additionally, another wallet, 0xD7CF A995, purchased approximately $304 million in Ether across both centralized and decentralized exchanges. Data from Arkham Intelligence suggests that this address engaged with major exchanges Binance and MEXC, reinforcing speculation about Bybit's aggressive asset recovery strategy. The fallout, market shock, and withdrawal surge. The massive hack resulted in a flurry of withdrawals, with Bybit customers pulling out over $5.3 billion from the exchange by February 22nd. The panic was further fueled by Ether's steep decline, dropping over 7% within hours of the attack, from $2,831 to $2,629. The price has since rebounded to around $2,765, according to CoinGecko data. Despite the turmoil, Bybit's auditor, Hacken, claims that the platform's reserves still exceed its liabilities, providing reassurance that user funds remain fully backed. However, with DeFi Llama reporting Bybit's total assets at $10.9 billion, uncertainty still looms over the exchange's long-term stability. Can Bybit survive this catastrophic breach? The Lazarus Group's attack has not only exposed vulnerabilities in Bybit's security framework, but has also set a grim precedent for centralized exchanges. While the company has seemingly recovered its losses, questions remain. Can Bybit withstand another cyber assault? Or is this just the beginning of a deeper crisis in the crypto industry? Montana lawmakers reject Bitcoin reserve bill, a major setback for crypto adoption. In a shocking blow to Bitcoin adoption, Montana's House of Representatives has voted against a bill that could have made Bitcoin a state reserve asset. On February 22nd, the bill, House Bill number 429, was struck down in a 41-59 vote, raising concerns about the state's reluctance to embrace the future of finance. Lawmakers say Bitcoin is too risky for Montana. Had it passed, the bill would have created a special revenue account allowing the state to invest in precious metals, stablecoins, and digital assets that have maintained a market capitalization of over $750 billion in the past year, a requirement that only Bitcoin meets. However, lawmakers expressed major skepticism about entrusting taxpayer money to what they deemed a volatile and speculative asset. It's still taxpayer money, and we're responsible for it. These types of investments are way too risky, said State Representative Stephen Kelly during the House floor session on February 22nd. Republican Representative Bill Mercer also opposed the idea, stating that he did not want the state's investment board to be involved in cryptocurrencies or non-fungible tokens, NFTs. This smacks of speculation to me. Another lawmaker remarked, reinforcing fears that Bitcoin's volatility could put taxpayer funds in jeopardy. Proponents argue the bill would have strengthened Montana's economy. Despite the resistance, some legislators firmly believe that embracing Bitcoin would have positioned Montana as a leader in digital asset investment. If we're going to keep the taxpayers' money, we owe it to them to maximize returns, said Representative Lee Deming, arguing that the bill could have achieved just that. Bill sponsor Curtis Schomer warned that not passing the bill was actually the greater risk, emphasizing that Montana's investment board is losing purchasing power by relying on traditional bond investments. Meanwhile, Representative Steve Fitzpatrick pointed out that Montana's investment board has a lot of money just sitting in the bank that could have been utilized for Bitcoin and other assets, potentially reducing taxes and offering financial relief to residents. Despite these arguments, House Bill number 429 is now effectively dead, and any attempt to introduce a Bitcoin reserve will need to be reintroduced in future legislative sessions. Other U.S. states push forward with Bitcoin reserve plans. While Montana rejects Bitcoin, other states are moving full speed ahead. A staggering 24 states have introduced similar legislation, including Arizona, Illinois, Kentucky, Maryland, New Hampshire, New Mexico, North Dakota, Ohio, Oklahoma, Pennsylvania, South Dakota, and Texas. According to Bitcoin laws, bills in 20 of those 24 states remain active, showing increasing momentum for crypto-friendly policies nationwide. Utah leads the charge in Bitcoin adoption. Among all U.S. states, Utah has made the most progress in establishing a Bitcoin reserve. On February 20th, the state's HB 230 Blockchain and Digital Innovation Amendments bill successfully passed through the Senate Revenue and Taxation Committee and is now headed for final Senate readings before an ultimate vote. If Utah successfully implements a Bitcoin reserve, will it trigger a domino effect among other states? And could Montana's rejection of Bitcoin prove to be a colossal mistake in the long run? Let us know your thoughts. Should states embrace Bitcoin as a reserve asset or avoid it due to volatility? Hong Kong investment firm's Bitcoin gambit. Is a market shock incoming? Hong Kong-based investment firm HK Asia Holdings Limited has doubled down on Bitcoin, BTC, acquisitions, signaling a bold move that could shake up financial markets. Following its initial Bitcoin purchase just a week ago, which led to an astonishing 93% surge in its share price, the firm has now added another 7.88 BTC to its holdings. A high-stakes Bitcoin play? On February 23rd, HK Asia announced that its board of directors has officially approved further Bitcoin purchases, pushing its total holdings to nearly 9 BTC. According to the company's filing, its latest Bitcoin acquisition cost approximately $761,705, financed entirely through internal resources. This recent Bitcoin purchase brings the firm's total investment in BTC to $861,500 at an average price of $97,021 per Bitcoin. A move that some analysts fear could expose HK Asia to extreme volatility. Stock prices skyrocket amid Bitcoin frenzy. The effects of HK Asia's Bitcoin bet were immediate. Following its first BTC acquisition on February 16th, the firm's stock surged by a staggering 93% when markets reopened the next day. As of February 24th, shares of HK Asia had already climbed another 5.7%, reaching 6.66 Hong Kong dollars, approximately 86 cents per share, putting it on track to break its June 2019 all-time high of 6 Hong Kong dollars and 50 cents. With the company's stock price already up 1,700% year-to-date, market observers are warning of a potential Bitcoin-driven stock bubble. If Bitcoin experiences a sharp downturn, will HK Asia's meteoric rise come crashing down? A growing trend of corporate Bitcoin adoption. HK Asia's move echoes a growing trend of publicly traded firms pouring money into Bitcoin as a means of enhancing their balance sheets and attracting investor interest. The firm justified its Bitcoin strategy by citing the rising adoption of cryptocurrencies in commercial markets, a sentiment shared by other major companies embracing digital assets. However, regulatory uncertainties and extreme market swings could pose serious risks. Unlike companies such as MicroStrategy, which have amassed significant Bitcoin holdings, HK Asia's relatively small-scale investment raises questions about its long-term strategy. Bitcoin prices stagnate, a warning sign. Despite HK Asia's aggressive Bitcoin play, Bitcoin's price remains sluggish. Over the past 24 hours, BTC has barely moved, dropping less than 1% to $95,537. The world's largest cryptocurrency has struggled to reclaim the crucial $100,000 psychological threshold since February 5th and remains 12% below its all-time high of $108,786 recorded on January 20th, according to CoinGecko. With Bitcoin's price stagnating and institutional investors like HK Asia making bold bets, could this signal the beginning of a dangerous corporate Bitcoin bubble? And if so, how long before the bubble bursts? Bitcoin struggle below $100,000 sparks fears while ETH, BNB, XMAR, and TO gain momentum. Bitcoin's weakness raises concerns as altcoins show signs of strength. Bitcoin's price has once again dipped below the psychologically critical $100,000 mark, leaving investors on edge as analysts warn of a potential plunge to $90,000. Meanwhile, key altcoins like Ethereum, ETH, Binance Coin, BNB, Monero, XMAR, and Bitcoin TO show bullish signs, sparking speculation that an altcoin season is underway. Bitcoin price analysis, a dangerous precipice? Bitcoin, BTC, recently fell below $95,500 on February 23rd after failing to break past the crucial $100,000 resistance level just 2 days prior. The longer BTC remains below this key psychological threshold, the greater the risk of a sharp downturn, potentially testing the critical $90,000 support. Market experts are split on Bitcoin's next move. While some predict a breakout to new all-time highs in the coming weeks, others fear a crash to $85,000 before any recovery can begin. The inability to reclaim the $100,000 mark is causing significant uncertainty, leading traders to shift their focus toward promising altcoins. CryptoQuant CEO Ki Young-ju has declared that alt season has begun, but warns that unlike previous cycles, this time, the rotation will come from stable coins rather than Bitcoin itself. He highlights that altcoin trading volume has surged to 2.7 times that of Bitcoin, suggesting that smart money is flowing into alternative assets. From a technical perspective, Bitcoin's 50-day simple moving average, SMA, at $98,933 is acting as a firm ceiling, with bearish pressure keeping BTC below this threshold. If Bitcoin breaks below the critical $93,388 support, the downward spiral to $90,000 could accelerate, potentially forming a dreaded double-top pattern, a classic indicator of a looming correction. On the bullish side, if BTC can reclaim and hold above the $100,000 level, traders could see a rapid rally toward $102,500 and even $106,500 in the near term. Ethereum ETH defies market uncertainty. Despite the recent $1.4 billion hack of the Bybit exchange, Ethereum ETH remains resilient. Data from CryptoQuant reveals that whales holding between 10,000 to 100,000 ETH have accumulated an additional $140 million worth of Ethereum since the attack. ETH broke above its 20-day exponential moving average, EMA, at $2,775 on February 23rd, signaling growing bullish momentum. However, resistance looms near the downtrend line at $2,850. If buyers push ETH beyond this level, a rally to $3,332 and even $3,525 could be imminent. Conversely, failure to maintain support could drag ETH down to $2,500, with further downside risk to $2,300 if selling pressure intensifies. Binance Coin, BNB, struggles to break key resistance. BNB's price action remains constrained below the 50-day SMA at $666, as sellers attempt to maintain downward pressure. Bulls need to push BNB past this barrier to clear the path for a potential surge towards $745. However, if BNB slips below the crucial $635 support, it could face a sharp decline to $596, reintroducing volatility into the market. Monero, XMAR, holding strong amid market uncertainty. Monero, XMAR, has shown remarkable resilience, holding steady near the $245 resistance. A decisive break above this level could trigger a swift rally toward $290. If the bulls fail to maintain control, XMAR could slide back to its 20-day EMA at $228, potentially testing its 50-day SMA at $219, a crucial support zone that buyers must defend. Bittenzer TAO, bulls target $600 breakout. Bittenzer TAO has encountered significant resistance at $500, but the bulls remain determined. If buyers successfully defend the 20-day EMA at $404, TAO could mount another rally attempt. Should TAO breach the $500 barrier, a surge to $600 may follow. However, failure to hold above the EMA could lead to a drop toward the $346 support level. Will Bitcoin's weakness fuel an altcoin surge, or is a major crypto crash ahead?